Well, as we've been telling you this morning, the Reserve Bank board will be split in two as part of a significant shake-up in the way interest rates are set in Australia. The government says it is broadly supportive of all 51 recommendations from a review into the role, function and culture of our central bank. Our business editor, Ross Greenwood, joins us here to explain. Ross, good morning to you. You've been highly critical of the Reserve Bank. Will these changes fix anything?
Look, they will. They'll change perhaps the culture. They'll change the public debate that's out there when it comes to setting interest rates and the amount of information that is given out there. In many ways, the Reserve Bank over a long period of time has been something of a closed shop, almost beyond, sort of, if you like, criticism. And so really, to a certain extent, the focus has been on the Reserve Bank and its way of being able to adjust to the inflation that came after the pandemic and obviously as a result of Russia's invasion of Ukraine and oil prices going through the roof. This is really what interest rates have done during that period of time. They've risen quite dramatically. You can see it's one of these situations where it's had to follow inflation up as well. This is your inflation rate. But I want to take you to the governor himself, because quite clearly there will be enormous pressure on him and his role. His term as the governor is due to end in September this year, and there has been some criticism about whether he should continue in that role. So this is his personal stats. Appointed in 2016, he's been there for 79 months. The inflation target we know is between 2 and 3%, and this review consolidates that view. It should be there as well. The time in target, though, of those 79 months is just 9 months. Wow. But mind you, they've overshot or undercooked the inflation rate during that time. And as we know, the average inflation rate for his whole time of being there is spot on. It's 2.5%. But the real problem, Pete, is the fact that it has overshot or undercooked it. And that's one thing that many people have looked at the Reserve Bank about and where these criticisms do come from.
OK, some this morning are saying, Ross, this is a convenient way for the government and opposition to blame the Reserve Bank for the rise in interest rates, to deflect blame away from themselves.
That's true, and it is, because what the Treasurer, Jim Chalmers, is looking for is bipartisan support. In particular, he's given enormous access to Angus Taylor, the Shadow Treasurer, to try and get a bipartisan agreement. Even a couple of days ago, he was saying that he doesn't want to go through the Senate and turn this into a political circus. One thing that is absolutely sacrosanct from all of this review is the independence of the Reserve Bank. What you don't want is politicians setting your interest rates, because they will make the politically expedient decision. They will not necessarily make the right decision. But look, let's take it back, because a lot of the criticism of the Reserve Bank goes back to one comment, or one series of comments that Philip Lowe made back in 2021 about where interest rates would head up. Have a little listen to what he had to say, and which really did focus the criticism on the Reserve Bank at that time.
I want to make it clear that this decision does not reflect a view that the cash rate will be increased before 2024. So I've discussed there is genuine uncertainty as to the timing of future adjustments in the cash rate. Given the information we currently have to hand, it's still entirely possible that the cash rate will remain at its current level until 2024.
Philip Lowe always said it wasn't a promise that rates would remain low until 2024, but it was certainly a pretty decent hint to people to go out there and borrow at that time. That's where the criticism came from.
Very much signposted it. Even the RBA board, some members saying last week they handled it terribly. But is there a danger that even now, Ross, the RBA has misjudged the economy? Its latest minutes reminding people that it might still have to increase interest rates, and sharply.
Yeah, there's no doubt. And you could see that even over the weekend auction results, and that is people went a bit nuts and they were buying properties, and they're out there looking right now in the expectation that maybe interest rates have peaked and are not going to rise any further. And so this is one of the big important aspects of this, and that is that the Reserve Bank was the last of the major central banks to raise interest rates. It was the first of them to taper them off in November last year. It was the first of them, in fact, then to keep them on hold last month. And so really, at every stage, it's tried to keep interest rates much lower than many other central banks in other parts of the world to address inflation.